they also will be joining. We have Mr. Jaishi, who is Associate Vice President, Sales Training from HSBC Mutual Fund. Along with him, our Siva Reddy also there, who heads Telangana for the manager for all of the MFDs. We welcome on behalf of entire team, Mr. Jaishi and Mr. Siva Reddy. And Mr. Jaishi today will be covering up about SIPs, how it can really give the ways to fulfill your long-term financial goals. Also, he covers about taxes related to the mutual fund and the retirement planning, which is really very, very need of the hour. A lot of people we spend the money whenever we get and we don't think about etc. And so all these things Mr. Jason will be covering. Subbu overcomes kindly admit them and as responsible is financial. We are doing every month, second Saturday, this financial empowerment program. When you know the clear about what is what about the product, about the solutions, and how really you can use them, and I'm sure your financial journey will be very very great. And the small drops is equal to ocean. If they say the SIPs plays a great role, and here Mr. Jaishil with his presentation will be really empowering all of you. And for the team, whatever you are learning, you can take it forward to various customers. Each and every one of you are dealing with around 250 investors. And investor, even it will be refreshed again. And for you, you can take it forward to your children, your relatives, and your friends. That's the way our maybe 5 crore people can invested and benefiting can be going to 10 crore and 20 crore, and whole nation can really participate in the wealth creation journey. With that introduction, I request Jaishit to take forward all of us in empowering, and through that, Jaishit can go.
Sure, sir. Thank you so much. Very good morning, everyone. I hope my voice is clear.
Yeah, clear.
Okay, great. So, warm welcome to this session. My name is Jayashil. I take care of trainings, corporate presentations for HSBC. And I'm very happy to be with all of you on this Saturday morning, discussing a few things on how to create wealth or how to fulfill our financial goals in a very easy way, that is the SIP way. And let us also see a few things about tax planning and retirement planning, which are very important for all of us. Let me start with a small saying. The saying it goes like this. They say, good luck knocks only once. Good luck knocks only once. And you know what bad luck does? Bad luck will knock till you open the door. Okay, because whenever we say finance or investing, whenever we suggest people to attend sessions, save some money, invest some money, sometimes we get these reactions like, it will be a boring session. What will we learn? It is okay. We can do it. This kind of reactions sometimes we get. But all of you, especially investors who are attending this session, I treat all of you as people who have opened the door for good luck at the first knock. Because my promise is, by the end of this session, you all will have at least one or two good key points to take away, which you can implement from today itself. Right? That is my promise. With that, let me share a presentation and we'll go ahead with the session. Right? So these are the three things we are going to cover today. How can I fulfill my financial goals in an easy way? Second one, how can I plan my taxes? Because especially now there is new tax regime, old tax regime, some confusion is there. I'll give you some inputs on how to select the right tax regime and how to save some tax. And the third one is the retirement plan. Right. So this is the agenda for the day. But my question is, why one should do financial planning or why one should invest? So the human lifespan we can divide into three parts. The human lifespan we can divide into three parts. First 25 years, then second 25 to 30 years, and the last 20 to 30 years. Right? So what is the first 25 years? We all know that is our education phase. The second phase of our life is our work life. And the third one, any guess? Yes, we all know that is our retirement phase. The question is, in your education phase, what is the source of income? So our parents are our source of income. Petty cash we used to get from them. And what are the expenses? Petty expenses, like small expenses we had. So we've done it well. But in the second phase, that is our work life, what is the source of income? So if you are a salaried employee, salary is your income, or if you are a business person, your business income is the source of income. Then what are the expenses? Right? I'm sure some of you will be smiling. The list goes on and on, right? We have living expenses, medical, travel, EMIs, then wedding, children's education, children's wedding, then vacation, functions, we have to give for functions, and retirement, whatnot. The list goes on and on and on. Right? It's a big list. Somehow we all are swimming through this phase. But the important question is, what is the source of income for you after retirement? Right? What is the source of income after retirement? There is no source of income because earlier, people used to get pension, but now government has taken away the pension scheme. There is no pension scheme, right? So 25, 30 years we work, and after that we retire. If there is no source of income, how will we survive the rest of the retirement? Right? So that is the importance of financial planning. So not only retirement, we all have these financial goals, right? Like owning a house, children education, children's wedding, and all these financial goals are there. How do we fulfill all these financial goals? One easy way that currently people do is take a loan, pay EMI, and one day die. Right? So that is what people do. But what we suggest is, for example, if you have a child, there are two goals which are inevitable. One is child education, second one is wedding. So these two goals are mandatory. Then what we suggest is, instead of waiting for the 20 years and taking a loan after 20 years, if you have a child, why can't we plan for these two financial goals? Right? So in an easy way, we can fulfill these financial goals. How? We are going to see in this session. Also, I would like to bring your focus to one more small point on the tenure of retirement, which I have mentioned here. 20 to 30 years I have mentioned. So, I mean, after retirement, if I retire at the age of 60, 80 to 90 years I have given. So, will I live so long or am I going to die? So, what is happening to human lifespan? Is it increasing or decreasing? Yes, it is increasing, right? Despite of all the adulterated food that we eat and the pollution that we take in, human lifespan is increasing, right? Why? The secret is nothing but the medical advancement, right? Because of that, earlier typhoid, cholera, malaria, people used to die, but now people are not dying. So doctors are doing a fantastic work. So because of that, human lifespan is increasing. So be ready for this. We are not going to die soon, right? 25, 30 years we work, another 20, 30 years we are going to live. And imagine there is no source of income. What happens? So that is why we have to do retirement plan. All of us, we have to have a good retirement plan in place. Apart from that, all these are the financial goals. How to fulfill them easily, we'll quickly see. While we are accumulating money or while we are investing money for all these financial goals, there is one big enemy which will eat away into the value of the money. Who is that? Yes, we all know that is inflation. Inflation is nothing but the rise of the prices in the market, right? So whatever is costing you 1 lakh or 2 lakhs today, after 10 years, it will not be 1 lakh, right? The rate will increase. So that is inflation. So here is a small example which I have given. For example, if an engineering or something is 10 lakhs today, after 10 years, it will be approximately 20 lakhs, 2 times. After 20 years, it will be approximately 3 times, right? I request all of you to remember this because we are going to use this in our future slides also, right? Whatever is costing you 10 lakhs today, approximately it will be double in the After 10 years, after 20 years, it will be 3 times. After 30 years, it will be 4 times. Right? So remember this one. So this is how the prices will increase. So whenever we are uh, planning for our future goals, this we have to remember. Now, what are the different options we have to invest? So yes, these are the different options. We all know that we can invest in gold, we can invest in bank, or we can invest in post office, we can invest in real estate, PF, PPF, equity, debt, mutual funds. Which one is better, right? So there is no good, there is no bad asset, nothing like that. Only thing is, everything is good. We have to understand the asset class and use it accordingly. Why we are showing this is 10, 15 years back or 20 years back, if you remember, all these are giving double digit returns. So my father, I remember, he used to say, bank deposit FD used to double in 5 years, right? That means the return rate was 12%. But now is it 12%? No, it is 5 to 6%. So things are changing. So we also have to change accordingly. So my previous generation, my father's generation, if they invest in bank deposit also, they were getting very good returns. But today that is not the case. So things are changing. So we also have to change. So for example, gold, how I use it, gold we have to buy. We have to buy for our wife. We have to buy for our child. We have to buy for gifting purpose. For wearing and gifting purpose, you can accumulate gold. But gold as an investment avenue may not be a great option because I will show you how each asset class has performed in the next slide. Similarly, bank deposits. You can use it for short term to save money and all. But for long term, real estate for living purpose, yes, we can definitely have your own house. But some people, what they do is they buy a second house or third house or fourth house for investment purpose. If they have the corpus and all, it is fine because real estate to enter itself, first of all, you need large corpus, right? For normal people, it is very difficult. So if I have one house and I want to create wealth for my retirement or any planning, instead of real estate, there are some other options also, which I'll show you in the next slide. Similarly, PF, PPF, the return rates are very low. So earlier, double digit return. Now, PPF is giving only 7.1% of return, right? So there is an option called equity. What is equity? Equity is nothing but investing in stock market, and debt is investing in bond market. So what is the benefit of investing in equity stock market? That is, the returns are excellent. So what are the returns? I'll show you in the next slide. Then what is the problem with equity? In short term, volatility will be there. So some ups and downs will be there. So that is the only problem. That's why for equity, I'll use it for long term. Similarly, debt investment is there. That is bond investment. The problem with bond investment is returns are low. The benefit of bond investment is the volatility also is very. Then what about mutual funds? Mutual funds, the best part of mutual funds is you can invest in equity or debt or gold or almost all these asset classes using mutual funds. So that is the benefit of mutual funds, which we'll see again after a few slides. So just to summarize all this, I'm not telling this is good, this is bad, nothing like that. Only thing is we have to understand each asset class and use it accordingly. For example, I have a short-term financial goal. I'll invest in bank. I have a medium-term financial goal. Probably I'll invest in debt funds. I have a long-term financial goal. I'll invest in equity. I want to gift gold. I'll invest in gold. I want to buy a house. I'll use real estate. Like that, each asset class has a purpose. We have to use that asset class for its own purpose. Because as I told you earlier, in our previous generation, all these are giving double-digit return, but now that is not the case. So what is the return right now? This is how it is. This is the last 40 years of returns of gold, silver, bank deposit, all these things. So in all these EPC, equity has the highest return. This is why we are telling for long-term financial goals, equity mutual fund is the best option, right? And all the gold, bank deposits, everything we can use for short term. But here, observe one small thing. So this is the equity return. See, for example, in 1986, it has given 62% of return. See, next year minus 11%, the next year minus 22%, the next year 79%, the next year 1%, the next year 63%. So it is not constant. So this 14%, whatever we are seeing, what we think is year 1 14, year 2 14, year 3 14. No, it is not like that. It will be like this. 1 year it will be 60%. Another year it will be negative minus 11%. Another year minus 22%. So the next year 79%. The next year 1%. So this is the challenge with equity. That is why what we are telling is in short term, ups and downs will be there. That means if I invest 1 lakh rupees in 1987, what happened after 1 year? Minus 11%. It became 89,000 rupees. Right? After second year, minus 22%. That means it went even more low. It became almost 70,000 or something. Right? So 1 lakh I have invested, it became 70,000 rupees. We'll get heart attack. But see what happened next year. 1%, 63%, the next year 267%. So if I invest for 2 years, I am losing 30%. If I invest for 5, 6 years, I'm gaining, crazily in a fantastic way. My wealth is created. So remember this thing: equity mutual fund investment or equity mutual fund investment is only for long term. Please don't invest for 3 years, 4 years like that. Invest for long term financial goals. Then we can see the benefit of equity investing. So these ups and downs are there now. So how to invest? So that is why we invest in mutual funds, right? Because mutual fund, they'll not invest in one stock or two stocks or like that. They'll invest in 30, 40, 50 stocks. Why? If there is a loss from one company, that will be covered by the profit of the other company. So that is the benefit, right? And they'll do a lot of research and they'll identify very good stocks and they'll invest. So in an easy way, sitting in our home, we can invest and we can create wealth in long term. So how to invest in mutual funds, right? So is investment, we've seen a couple of things till now. Is investment important? Yes, it is important because we all have financial goals. Second thing, where to invest? There are multiple options and equity mutual fund looks very interesting for long term. Now the third thing is how to invest in mutual funds. So there is a small method called SIP. SIP is nothing but systematic investment plan. Systematic investment plan is called one of the best options for long-term financial goals. You know why? It is very convenient. If you want, you can do a daily SIP, you can do a weekly SIP, a monthly SIP or a quarterly SIP. Generally, the popular one is the monthly SIP because we all get salary once in a month, right? So for long-term financial goals like children education or children's wedding or retirement plan or international vacation, like this, any long-term financial goal you have, this is one of the best option because we invest small amounts here, 5,000, 10,000 per month like that. And we'll invest for some 10 years, 15 years, 20 years. We redeem bulk amount. So it is very easy on your wallet, right? And it will create wealth in long term. So that is the best option. Or if you want to understand this in even more easy manner, so an SIP can be considered or can be compared to bank RD. We all know RDs, right? Recurring deposit. Recurring deposit, what happens? We invest small amounts, we get compound interest, and after some years, we redeem bulk amount. Same way, mutual fund SIP also, we invest small amounts, after few years, we redeem bulk amount. If it is like RD, I'll invest in RD only, no? Why should I come to mutual fund SIP? Why? The interest rate is the difference. Yes, in bank, we get 5 to 6% currently, but in mutual fund, we can expect little more returns. So that is the benefit of investing in mutual funds. Here is a small example. Okay, here is a small example. One more benefit of investing in mutual funds is the compounding effect. Chakravadi, right? We get the compound interest. So this is a small example. If anyone is investing 5,000 rupees per month, so generally we suggest to look at 12%, 10 to 12% of return. So if you are investing for 5 years, 5,000 per month for 5 years. You're investing 3 lakhs, and the 3 lakhs is becoming 4.26 lakhs. How is it, sir? Is it interesting? Is it interesting?
Yes, sir. Very much. Very much.
Yeah, yes, right. But 3 lakhs I have invested, it became only 1 lakh more. It is interesting, but I'm not that happy. But see what happens if you invest for 10 years. I invested 6 lakhs, it almost became double. Right? Now it is more interesting. See if I invest for 15 years, 9 lakhs I have invested, it almost became 3 times. If I invest for 20 years, 12 lakhs I am investing, it is becoming almost 4 times. Now is it interesting? It is more interesting. So that's why we say equity investment or mutual fund investment is for long term. If you have for example, you have a daughter, right? After 20 years, you want to get her married, and 50 lakhs is what you want. You know what you can do? Start an SIP today of 5,000 rupees. See the last example. 5,000 rupees of SIP from today. You invest for 20 years. You will be investing 12 lakhs. After 20 years, you will get 50 lakhs. Without taking 1 rupee loan, you can perform the wedding of your daughter. Right? This is the benefit of mutual funds. This is the benefit of SIP. Right? So this is how we can use mutual funds to fulfill all financial goals for us. So we have multiple financial goals like children's education, children's wedding. Now, how is the cost of education? Cost of education is increasing, right? So plan for your children's education, children's wedding, or a vacation, retirement planning. All these in an easy way you can fulfill using SIP, right? So this is the benefit of SIP, which we wanted to share with you in the first part. So it is very convenient, and now online option also is there, and offline option, online option, both are there. Only one time KYC you have to do. So once your KYC registered, that's it. You can easily invest in mutual fund. Now, before we go to the next part, I would like to touch the fourth point also. Now, is investment important? Yes, it is important. Now, where to invest? Multiple options are there. Equity mutual fund is looking very good for long-term financial goals. And inflation also we have to keep in mind. And lastly, how much to invest? How to invest, we've seen SIP mode is the best option. But the question is, how much to invest? How much? 2,000, 5,000, 10,000? How much to invest? Right? The best option to identify the amount to invest is basis on your financial goals. For example, I have 3 financial goals: children education, wedding, retirement. So what I'll do is I'll calculate the future value. For example, my daughter is 5 years old now, and I want to get her married at 25. So for my child wedding, the second goal, I have 20 years. Similarly, child education, I have 15 years. For example, I'm 35 now, example. So for my retirement, I have 25 years. So I'll calculate what is the amount that I need to fulfill the financial goals. For example, child education is costing me some 10 lakhs today. Some engineering is costing me 10 lakhs today. I'll calculate what is the cost after 15 years. Child education, child marriage. So I want to spend 15 lakhs for wedding now. So what will be the cost after 20 years? And retirement, some 60 lakhs it is costing me today. So what is the cost after 30 years? So this is how we identify the future amount. So how do I identify the future amount? You remember that slide which I showed you? After 10 years, it will be times. After 20 years, it will be 3 times. After 30 years, it will be 4 times. Right? I will calculate the future amount of all these 3 financial goals. And simple, do a reverse calculation. So to achieve this 40 lakhs or whatever, how much SIP I have to start today? Right? So that will take care of my first goal. Second goal, for the 60 lakhs or anything of my child's wedding, how much SIP I have to start today? Second goal is done. Third goal, 1.5 crores, for example, is my retirement planning. So to achieve this 1.5 crore, so how much SIP I have to start today? So 3 SIPs, I'll start and I fulfill my financial goal. This is how we identify what is the amount to invest. Other than that, if we think, okay, 5,000 I'll invest, 6,000 I'll invest, no, it will not help, sir. Sir and madams, the best option is identify your financial goals, then identify the amount that you need to fulfill these financial goals, and do a reverse calculation to get that amount in that particular year. What is the SIP that I have to start today? Sir, I am very technical. This is looking very technical. I don't know this much technicals. No problem. The ECS team will help you with this. So that's why they have arranged this session for all of you. See, they will help you on how much you have to invest, how much is how much is the financial goal, how much you have to invest. They'll help you out with all the financial plan. Sir, easily you can fulfill your financial goal without taking loan by investing in SIP. Kindly use that. So this is the first part which we wanted to share. Right. We'll quickly go to the second part, that is the tax planning. Right. So in tax planning, we'll quickly see the income tax rules. So I thought I'll just quickly update because there is a old tax regime, new tax regime now. For salaried people, especially some confusion may be there. So quickly we'll see how to select the income tax and what are the different sections to save the tax. So for taxation purpose, Government of India has divided all the people into these 4 slabs: individual below 60 years of age, and then senior citizen 60 to 80, super senior citizens above 80 years of age, and HUF. So different slab categories will have different slabs, and individuals and HUF will have same tax. Now this is the old tax regime. So the slab system works like this. So up to 2.5 lakhs of income, there is no tax. It is tax free for everyone. 2.5 lakhs to 5 lakhs, it's a 5% tax. 5 lakhs to 10 lakhs will be 20%. Above 10 lakhs will be 30%. It does not mean if I have 12 lakhs of income, that means all the 12 lakhs will be taxed at 30%. No. It will be on a different slab basis. So this is the example. For example, I have 10 lakhs of income, right? So my 2.5% will be no tax. Then next 2.5 lakhs will be taxed at 5%, that is 12,500. Next 5 lakhs will be taxed at 20%, and that's it. So with that, my 10 lakhs is full. So my tax will be 1.12 lakh. Imagine next year my salary increased by 1 lakh. You know what happens? Then that additional 1 lakh will fall into the 4th slab, which is 30% tax slab. Right? Then see my tax now, 1.42 lakhs it became. So now what we can do is, if I want to reduce my tax, here I can invest in ELSS, I can take some life insurance, or I can take some health insurance, I can do NPS. So these are different sections which are available. Using that, I will invest 1 lakh rupees. So my taxable income will become 10 lakhs. So I can save a tax of 30,000. Right? So this is how the slab system works. So all things were going fine, and a few years back, government has introduced new tax regime. So the new tax regime is like this. This is the currently applicable new tax regime. In this, what happens is, for every 3 lakhs, the tax will go up by 5%. And up to 7 lakhs, there is no tax. So this is the new tax regime. Now people are getting confused whether I have to select the old tax regime or the new tax regime. Now we have done some calculations with the help of ClearTax, and we have found out that now whether you want to decide to go for old tax regime or new tax regime, there are 2 things which will help. In your organization, some flexi pay options will be there. For example, Sodexo coupons, LTA, car allowance, mobile allowance, like that. If you want to use all of them, you opt for old tax regime. If you don't want to use all of them, opt for new tax regime. Similarly, there are different sections Government of India is allowing, right? ATC, where your LIC premium, insurance premiums, or mutual fund investments, ELSS mutual fund investments, all these are exempted from the tax. Similarly, ETD, health insurance premium, Section 24, home loans, interest, all of these. If you want to use all the sections, choose the old option. If you don't want to use all of that, choose the new option. Simple, right? So it all depends on 2 things. the FlexiPay options which are offered by your organization. And second one is the different sections that are offered by the government of India. If you want to use all these, choose the old tax regime. Don't want to use, choose the new tax regime. Right? So that is the differentiator. Also, in clear tax, a small interesting slide is there. At different income levels, if you are investing some amount, what is the new tax regime or old tax regime that you can sell? For example, my income is 10 lakh rupees. So here is this 10 lakhs example, and I'm investing some 1 lakh rupees, right? So I am investing only 1 lakh rupees on my 10 lakhs of taxable income. Then I can go for new tax regime. So for earning 10 lakhs, if you are investing close to 2.5 lakhs, old tax regime or new tax regime, it doesn't make any difference. But if you are investing more than that, go for old tax regime. So this is a small interesting slide Clear Tax has circulated. So largely, as we've discussed in the previous slide, if you want to use all these different sections, go for old tax regime. If you don't want to use all these sections, go for new tax regime. So this is what we can suggest. But if you are some more interesting things are in your office. For example, especially for salaried class, if you're not selecting the tax regime, default tax regime will be new tax regime. Earlier it was old tax regime. Please be mindful. Switch in, switch out is not allowed between the financial year. That means if I opted for new tax regime and then I want to change it to old tax regime, that is not allowed in the financial year. After the financial year is over, you can change if you want. But this change is allowed only for salaried class, not for business people and professionals. So that is the third point. So for business and professionals, once you opt for a new tax regime, you cannot go back to old tax regime. And all the taxes will be, there is a 4% cess on all taxes. And in new tax regime, very less exemptions are there. What are these? I'll show you in the next slide. There is a standard deduction of 50,000 rupees. That means if I am earning 10 lakh rupees, straight away 50,000 is exempted from the tax, and I have to pay tax only on the 9.5 lakhs. That standard deduction of 50,000 rupees, standard exemption of 50,000 rupees is given for everyone by the government of India. For example, I have a house, right, own house, and I am living in that. So there is no exemption on that. But if I am giving it for rent, right, whatever rent I am getting, on all the rent, I need not pay the tax. So 30% exemption is given. So whatever rental income I am getting, so 30% is exempted. Remaining 70% I'll pay tax. And worldwide, wherever you are paying income, okay, it will be taxed in the country. Right? You have to pay tax in India. So these are some interesting points you have to remember. And this also we've seen. If you want to select the old tax regime, reduce your taxable income by using the flexi pay options and different sections which are available which are provided by the government of India. So what is the benefit? See the benefit. So if anyone is not using the flexi pay options and different investments on a 12 lakh salary, as I told you, straight away 50,000 is deducted, no tax on 50,000. So net taxable income will become 11.5 lakhs. So in old tax regime, you remember the slabs? The total tax payable is 1.57 lakhs. So if anyone is not using the FlexiPay options and the different sections, but imagine someone is using them, right? For example, Sodexo coupons and all, I've taken for 1 lakh rupees. Sodexo coupon, LTA, all of that. And secondly, ATC, my insurance premiums and ELSS investment, everything I've used for 1.5 lakhs. And 80D, health insurance, I used for 25,000. And home loan interest I've taken and I've used it. So some 4 lakhs I've invested. So now my taxable income will become only 8 lakhs. If you see the tax system, it will be approximately half of it. Right? So this is how you can save tax. So tax planning is nothing but you are enhancing your post-tax income. How can you do that? By investing in different options which are provided by your organization and by the country. Now I'm saving so much money. What should I do with that money? Invest. Don't spend. Right? You invest for your future financial goals. That will always help. Now, what are the different sections we have? So quickly we'll see these sections. So one of the most popular one is your ATC. ATC covers all these, your provident fund and life insurance premiums, ELSS mutual funds, NPS, FDs for 5 years, and national savings certificates which are offered by the post office. Sukanya Samriddhi Yojana for girl child, and senior citizens savings scheme by the banks. If you are taking a home loan, the principal that you are paying is also covered under ATC. The tuition fee for children, when you pay school fees, a part of the school fees is called tuition fees. So the tuition fees also you can take tax exemption, and public provident fund PPF. Right, all these are covered under ATC, but the maximum tax exemption that we can take is only 1.5 lakhs. So if anyone is investing in NPS more than 1.5 lakhs, additional 50,000 rupees exemption is given for them. So if anyone wants to use that, they can use. Medical insurance also is exempted, right? So for example, the investor and the parents both are less than 60 years. Up to 25,000 rupees, you can take an exemption. If the person is less than 60 and the parents are more than 60, so up to 50,000 you can take it. If the person and parents both are more than 60 years of age, then you can take a tax exemption up to 1 lakh rupees per annum. So these are different sections which you can use to save the tax. Similarly, if you are taking a home loan, the interest also is exempted under section 24. Then if you are buying an electric vehicle, you are taking a loan and buying an electric vehicle. So on that, the interest that you pay also is exempted from the tax. So this government has introduced to promote the less polluting your battery cars and vehicles. And any donations that you are paying, that you are donating, is also exempted from the tax. And this is for business class. If you are staying in rent house, and under 80 GG, you can take a HRA, house rent allowance exemption up to 60,000 rupees. If you are taking an education loan, the interest on the education loan also is exempted. It can be for yourself, your spouse, or your kids, or if you are acting as a legal guardian for them also, you can take this exemption. And finally, these two are for real estate, right? So as we all know, for real estate also there is a tax, right? So if you are buying and selling house, right, you're on the profit, you have to pay the tax. But if for example, this section 54 I'm explaining, for example, you purchased a house for 50 lakhs. After 5-10 years, you sold it for 75 lakhs, right? Now 25 lakhs profit is there. So on that 25 lakh profit, you have to pay the tax, right? But using that profit, if you are buying another house, or if you are constructing a house, you need not pay the tax. So that is what section 54 says. So on real estate also, government is giving exemption. So kindly use this and reduce the taxes. And the last one, 54 EC, is for plots or commercial buildings, right? So I bought again same 50 lakhs I purchased, and 75 lakhs I sold. 25 lakhs is the profit. So there are some specific bonds which are prescribed by Government of India. So if I am investing in that bonds, I need not pay the tax up to 50 lakh rupees. Like this, multiple sections are there, whichever are applicable for you, use them and save the tax is what we suggest. So what is the purpose of using all these tax saving instruments? As I told you, we are reducing the tax exemptions and enhancing the post-tax income so that we can save money and invest. Whatever I told till now is only for old tax regime. What about new tax regime? Yes, there are two options for them also. Quickly, I'll tell you what it is. So standard deduction is applicable for new tax regime, and employer contribution of NPS up to 50,000 rupees is exempted. So understand this, this is not my investor contribution. So whenever a person contributes to NPS, sometimes the company also will contribute. So whatever is the company contributing, that is exempt, not my contribution. And finally, if you have a own house, you taken a home loan, you purchased a house, and you've given it for rent, right? Then the interest on that is exempted up to 2 lakhs. So this is the these are the options which are available for new tax regime. So so tax planning is nothing but selecting the right tax regime and using different sections to save tax so that we can invest some more money. Right? I hope this session also is useful. So that brings us to the end of the second session on tax planning. And quickly we'll go to the third one, that is retirement planning, which is very inevitable for all of us.
Jaishil, before that, mutual
Yes.
fund taxation you have not covered. Just you can give
Yes, sir.
1 or 2 sentences. Yeah.
Sure, sir. So give me one moment. So we'll cover the mutual fund taxation also. So different asset classes have different taxation. So we've seen there is gold, real estate, all these things, right? Bank deposits, everything. So what is the taxation on all these? So mostly everything is taxed on the income tax slab. So for example, someone is at 30% tax slab. So that is, I'm earning more than 12 lakhs of income like that. Whatever income is in the last slab is taxed at 30%, right? Now, I have invested some money in the bank deposit. So bank deposit say 5-6% interest rate I got. So how is it taxed? It is taxed at the individual's tax slab. So whatever is that profit, 10,000, 20,000 profit, that will be added to my income tax. And since I am at the 30% tax bracket, I'll pay 30% tax on the interest that I earn. So this is what happens with gold. Sorry, not gold. This is what happens with your bank deposit. Gold and real estate, the taxation is 20%. And you know which is having the lowest tax? Mutual funds is having the lowest, right? In mutual funds, there are two types of taxes. So if I am investing today and I am redeeming before 1 year, I have to pay short-term capital gains tax. If I am redeeming after 1 year, I have to pay long-term capital gains tax. Sorry. So I'm talking about equity mutual funds. So what is the short-term capital gains tax and long-term tax? So for example, I've invested 1 lakh rupees today, and after 6 months, it became 1,50,000 rupees, right? I have redeemed all the 1.5 lakhs. Now, out of the 1.5 lakhs, 1 lakh is my principal, and 50,000 is the profit that I have got. So on this 50,000 profit, I have to pay the tax. So what is the short-term tax? 15% is the short-term tax, right? So 15% of 50,000 is what is?
15.
Yeah. So that I have to
15.
pay. 15,000 rupees I have to pay, right? Similarly, if I am redeeming after 1 year, for example, same example, 1 lakh I have invested.
Sorry, 7,500. I just
7,500. Yes. So 15% of 50,000 is 7,500, which we will pay, right? So second scenario, I have invested 1 lakh rupees. After 1 year, it became 1.5 lakh rupees, and I am redeeming the total amount. So again, out of the 1.5 lakhs, 1 lakh is my investment. There is no tax on that. On the 50,000 rupees, I have to pay the tax. Now, what is the long-term tax on equity mutual fund? Up to 1 lakh of profit, if you are redeeming, there is no tax. It is tax-free, right? So beyond 1 lakh, whatever I am redeeming, only 10% tax is. So in this example of 1.5 lakh, zero tax. Second example, I have invested 1 lakh rupees. After 1 year, I am redeeming, became 2 lakh rupees, double. Then what is the tax? Still zero. Because out of the 2 lakhs, the first lakh is my investment. There is no tax on that. On the second lakh, up to 1 lakh, there is no tax. Tax free. So even if it becomes double, zero tax. Third scenario, 1 lakh I have invested, it became 3 lakhs. right? After 2-3 years, it became 3 lakhs. Now I am redeeming all the 3 lakhs. Now what is the tax I have to pay? The first lakh, there is no tax because that is my investment. Second lakh is tax free. On the third lakh, I have to pay 10% of the tax. That is only 10,000. So if my investment becomes 3 times, what is the tax I'm paying? 10,000 rupees or 10%. So tax is there in mutual funds, but when you compare to the quantum of returns that we are generating, the tax is very low. When you compare to the other asset classes like bank deposits or gold or real estate, the tax is very low. So this is the benefit, another benefit of mutual funds. Even taxation wise also, it is very low, right? So this I missed to tell. Thank you, sir, for alert, and I hope the taxation part also is very clear.
Thank you.
Right. So quickly we'll go to the last part on retirement planning. You're a salaried class employee, right? So one inevitable goal for all of us is retirement. Some people will think it is very difficult and all. Very easy. Let us see how to plan our retirement. So retirement planning happens in 3 stages. One, we have to identify the retirement corpus. Second thing is, how do I achieve that? Third thing is, after retirement, how do I generate regular income using that corpus? So these are the 3 steps. But I think the crucial step is the first step on identifying the retirement corpus. So how do I identify the correct retirement corpus for me? So that again will happen in 3 stages. In the first step, I have to calculate what is the per month living expenses I'll have today. If I retire today, how much I need to survive per month? What are the expenses per month? For example, 30,000, 40,000, 50,000. So we'll identify the time. Second step is to get this, how much I have to invest. A simple calculation which I'll give you is this per month expenses into 200 will tell you how much you have to invest, right? And the third step is for this investment is face cost. So if my retirement is in future after 10 years, I have to calculate the future cost of that. How do I do that? Same inflation example. After 10 years, it will be 2 times. After 20 years, it will be 3 times. After 30 years, it will be 4 times. So this is the theory part. When I show an example, it will be very easy. For example, I need 50,000 rupees today. If I retire today, for my monthly expenses, I need 50,000 rupees. So how much I have to invest to get this 50,000 rupees into 200? So that is 1 crore. Why into 200? Because after retirement, the retirement amount, whatever retirement purpose you have, either you can put it in bank, can buy annuity plan, or you can invest in mutual fund and take SW. All these 3 generally will give you 5 to 6% of redemption per annum. So I've taken 6%. If I take 6% into 200 is the calculation. So I'll show you one example. So for example, 1 crore is what I got today. I am retired today. I got 1 crore rupees. So this 1 crore, I'll invest in mutual fund. I'll start an SWP, systematic withdrawal plan of 6% per annum. That means out of the 1 crore, I am redeeming 6% per annum. So 6% of 1 crore is how much? 6 lakhs. 6 lakhs divided by 12 is 50,000 per month. So if I invest 1 crore, I'll get 50,000 rupees. Easily I can get 50,000 rupees. So similarly, I want only 25,000 rupees. How much I have to invest? 50 lakhs. I need 30,000 rupees. How much I have to invest? 60 lakhs. Like that. So like that we can calculate. But this 1 crore, whatever is there, that is today's cost. I have to calculate the future cost of that, right? So if I am 50 years of age now, I am retiring in the next 10 years, then my retirement corpus will be 2 times of 1 crore, that is 2 crores. If I am 40 years old and I am retiring in next 20 years, my retirement corpus will be 3 crores. And I'm 30 years old, retiring after 30 years, my retirement corpus will be. This is how we identify the retirement corpus. So here is an example of 30,000 rupees. So if 30,000 is enough for me, I'm going to stay in my village and after retirement, and monthly 30,000 is enough. Then 60 lakhs is what I need today. And after 10 years, it will be 1.2 CR. After 20 years, it will be 1.6. And after 30 years, it will be 2.4 CR. This is how we identify the retirement corpus. Now the important question is how to achieve this amount, right? How to accumulate funds. Now these are different options: bank deposit, PPF, NPS, SIP in mutual funds. So we've discussed all these in goal-based investing. So straight away I'll show the returns. So if anyone is investing 10,000 rupees per month for 30 years, the total amount invested is 36 lakhs, and this is how each asset class has given you the returns, right? So the best part is equity SIP, or if you want, you can do a small asset allocation between NPS and equity SIP, right? Because these two are only giving the high returns. So this is how we accumulate that retirement corpus. Now, for example, I am retired. I got 3.5 crores in my hand, right? So using this amount, I have to generate monthly regular income. So what are the options I have? That is the third step. What are the different options we have? As I told you, I can put this amount in bank and take regularly monthly amount, or I can buy annuity plan from insurance companies, or I can invest in real estate. Generally, this is what people do. Buy additional. Already I have a house. I'll construct an additional floor and I'll give it for rent. And I can do SW. Now, which one is better? So this is a small comparison. So returns wise, if we see, mutual funds has the highest returns. Tax wise, if we see, insurance plans, there is no tax on the insurance corpus that we get. But as I told you, mutual funds are very tax efficient, right? And then liquidation in bank deposit, if you are liquidating before the maturity, there is a penalty which is levied. And annuity plans, there is no liquidation allowed till the person is deceased, and is not applicable in real estate. But liquidity is very convenient in mutual funds. So one application within maximum 2 working days. On the second working day, you will get your amount in your account. The amount can be 10,000 or 1 lakh or 20 lakhs or 1 crore or 20 crore, whatever is the amount. So this is one of the biggest benefit of mutual fund. Whatever is the amount, there is an emergency, you need the amount in hand. One application. On the second working day, you have the amount in your account, right? So capital preservation is there in all the asset classes, but capital appreciation, that 3.5 crores, whatever I have invested. So is it growing? That will not grow in bank deposits and annuity plan because the growth is very low. Because the difference is very simple. So in bank deposit, 5 to 6% return you are getting, and 5% you are redeeming. So the capital will not grow. But in mutual fund, 10 to 12% return we can expect, and we are redeeming only 6%. You remember 6% of SWP. The remaining 5-6% will be added to the capital. So the capital will grow. How will it grow? One example is there, which I'll show you in the next slide. So can you have a control on how much I get monthly? So there is no control in all these 3 asset classes. But in mutual fund, you can decide how much you want to redeem. If you want to redeem more, you can do it. If you want to redeem less, you can do it. And the best part is, what happens after the investor's death? In bank deposit, the account will be closed and amount will be paid back to the nominee. Same thing with annuity plans. Policy will lapse, amount will be paid back to the nominee. In real estate, the legal heir will take over. But what happens in mutual funds? The nominee can cut it, right? So once an SWP is started, so if the investor dies, the nominee can continue the SWP. If the nominee also dies, her nominee can continue. So this is the beauty of mutual funds. So once you start an SWP and you keep the SWP rate less than the fund return, that means fund is giving you 10 to 12% of return and your SWP is 6%. There are chances that this SWP will continue for generations together. Right? This is the benefit of mutual fund SWP. So for your retirement planning, whether to accumulate or whether to distribute the retirement corpus, mutual funds will help you in a fantastic way. And as I told you, there is a small example of capital appreciation. This is how it is. Example, I have invested 30 lakh rupees and I am redeeming. How much I am redeeming? 20,000 rupees per month. I have taken the SWP of 8%. Sorry, there's a mistake here. This is not 6%, this is 8%. Right? So 30 lakhs I have invested, and monthly I'm taking 20,000 rupees. So this data is from February 2011 to March 2023. So 30 lakhs I have invested, and already I have 29 lakh rupees. But you know what is the current value? The current value is 43 lakhs. This is the benefit of mutual funds. This is the benefit of SW. So, and this is how the valuation move. This is the the red line is the 30 lakhs investment, and this is the valuation moves ups and down, right? So this is the benefit of mutual funds with respect to retirement planning. Whether to accumulate, you can use SIP. Whether if you want to distribute regular income, generate regular income using the corpus, SWP is the best option. So whether SIP or SWP or STP, whatever, for all investment related things, mutual funds will help you. So you can definitely consider mutual funds as one of the options for you to invest. So this is what we wanted to share with you today.
Thank you. Thank you very much, Jayashil. I did not interfere the way in which you are really taking the audience with a very detailed manner. And also, it's about three things we covered up. It's not only one topic, a SIP to use to reach their long-term financial goals. Also,
Yes, sir.
how tax efficiently these mutual funds can benefit over investing and using a mutual fund. Also, how we can use the mutual funds through SWP for their retirement, really happy life, really fantastic, Jayashil. Maybe from my point for all of my investors and for my team, please invest regularly. Small drops is equal to ocean. Your SIP, as Mr. Jayashil said, invest in 5,000 rupees, example, every month for 25 years. It can become a crore. You put 10,000 rupees per month for 25 years, it becomes 2 crores. It is not just we are talking in an assumption. The last 10 years, rolling return of the market, how they generated from 2014 to 2024, how the market grown yearly wise, rolling return, which has been proven, which is around 12.36%. Those who invested like that, if they really got a crore, if it's 5,000 or if it's 10,000, 2 crore, you just divide 1,000, it's going to be 20 lakh, it's going to be 2,000, it's going to be 40 lakh. So, mutual fund SIP and make you discipline of investment and getting very tax efficient instrument, and also as Jayashil covered, whether be it your children education or children marriage or your foreign tour or you are enjoying your retirement life, for all these things it's going to benefit all of you. And India is really growing, and India inflation and GDP together almost 13 to 14%. Even the nominal invest in any of the good company, be it a tech company, be it energy company, be it AI company, or be it your manufacturing or automotive or anywhere you invest in the company, they are growing at minimum 15% to 18%. So as they should moderated your expected returns, not 15, 18%. Even 12% to 15%, it makes a lot of wonders to you. And this is the India decade, or maybe 2, 3 decades, whichever, whoever is going to rule. But India's youngsters' intelligence and their contribution to the country and their aspirations, it's really going to make all of us to grow. Please use, in addition to your bank deposit, it is around today 180, 200 lakh crore. It is going to go to 400 lakh crore. Mutual fund industry, where we are sitting at around 54 lakh to 55 lakh crore, we are expecting another 7 years time. It's going to go to 110 to 120 lakh crore. It is growing. It's a proven. It's not only SIP we are talking about. In the PMS, where minimum is 50 lakh, in which itself already 5 lakh crore is crossed. People want not small money. They want to invest 50 lakh minimum, wherein the size of the industry grown to 55 lakh crore. Like that, alternate investment funds, where they can go in startups, they can invest in the ideas. and minimum is a 1 crore. That is equally like 2 lakh, 3 lakh crore industry. So it's whether you have 1,000 rupee, whether you have 50 lakh rupee, whether you have the crore rupee, you have all the product. Please invest regularly. Use tax efficient investment. Make in the retirement planning, not your houses you construct and you have 3 plots, 3 houses, which is not going to help you at all because you can't sell when you want. So you need to have the financial savings to get your regular income to meet, to fulfill aspiration, your own grandchildren or children or your wife or your sister or brothers. You need to have the financial saving. Having the fixed asset or real asset is not going to help you. So have the real asset for living for yourself, have the you're feeling like it's my home. But beyond that, please make it financial saving. That is what going to make your life peaceful and really enjoyable. Also, it's going to be for the children, it will be helpful. So with that, maybe it was so interesting. 3 topics Jaishil covered. I generally interfere by 11:45 itself, so that 15 minutes I'll give for the Q&A. Already we are at 12 o'clock. I'll extend 5 minutes because we respect the time of the people.
Sure.
We generally not only start on time, we close on time. So I'll give another 4 minutes time only for the investor, not for the team. If anyone in the chat box, Subbu, you can read out that. Or you want to ask, you can ask, unmute, you can ask a question. Where Mr. Jaishil, with such a wisdom of financial product and solutions, he can really tell. Yes, please. Subbu, anything on the chat box by the customer? Any questions, Subbu or Karthik?
Nothing, sir. Up to
Great.
No, sir.
And maybe Jaishil, you've given such a high coverage. Maybe people
Maybe.
are question. Please share this presentation. It's very wonderful, interesting. For my team also, they can really do a lot of investors awareness program or what we call it as in our company, financial empowerment program. So with that, we will continue to bring the best of the speakers in the interest of all of you to get empowered so that you can enrich yourself and you can enrich our nation. That really we can be proud of as an individual, proud as a nation. Thank you very much and all the best to all of you. Thank you, Jaishil. Thank you,
Thank you,
Shivareddy.
sir.
Thank you, all my team who brought the customer. Thank you, customer, giving your really your valuable time. Thank you. And Subbu, we can end.
Thank you so much. Thank you so much, and bye.
Okay, sir.